Hello everyone and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie and today I'm joined by Steve. How you going, Steve?
Hi Ollie, good afternoon everyone. I'm good. You must be thrilled after a 1-point win on Friday.
Mate, DCE sending us off with style. Okay. All right, so let's move into the agenda for the video ahead. For any of our returning viewers, this will all look pretty familiar, but for any of our new faces here, this is how we normally do it. So starting off, we'll take a look at the previous week to have a look at some of the key events which happened, analyze how the price has moved with all the key themes, and see how all the events move the markets. We'll then move into the week ahead, where we'll put a spotlight on some of the major events for the week ahead, see how these fit into our key themes, and give our take on how we think the prices will move. We'll then move into the technical corner, where we'll put a spotlight on a couple different markets using a top-down analysis using our technical indicators. And then lastly, we'll move into our Q&A section where Steve and I will answer some of your guys' most commonly asked questions from the week prior. Okay, so moving into the last week's section, starting off on screen, you guys will see your top traded products for the week prior. So actually no changes from this week compared to the last week, which I did find quite interesting. We see gold still sitting in there. It's always remaining in the top traded products, along with a lot of US heavy products. But anyways, how about you, Steve? See any surprises in there?
No surprises, especially gold on its stellar run, as well as the Aussie, for example, which is a commodity-based currency. So no surprise in that.
Too good. All right, let's take a look and see what moved the prices. Steve, you want to take it away?
Yeah, so last week we did have bank holidays at the beginning of the week, just for Canada and the United States. So a little bit less liquidity. We've mentioned probably a number of times how that impacts the market. So it pretty much means that there's less volume that goes through. Obviously, being the bigger, like in Canada, it wouldn't have made too much of a difference, but within the United States, it does really drive the market. We saw throughout the week the Aussies of commodity prices and unexpected higher GDP, which was a bit of a surprise. We also saw the Chinese, the Caxton Purchasing Managers Index, which was higher than expected. So that's a good sign, especially for the Aussie. The Aussie is very reliant on a lot of the China data, and seeing that sort of expand when it comes to the numbers and seeing that the businesses are doing well, that was a good sort of sign that really elevated the Aussie. But also the Eurozone was pretty much as expected, slightly above with the CPI numbers. But throughout the whole week, the main information was really around looking at the US data. So we started really with the Purchasing Managing Index, so the ISM, so the manufacturing and services, which was mixed. But ultimately, the biggest driver throughout the last week was in regards to the unemployment. So when we last heard Jerome Powell speak, so the Fed chair in the Jackson, Wyoming, he did mention about the dual mandate, about the unemployment, as well as the inflation, but the real focus was around the unemployment. So what we saw was towards the beginning of the week, so Wednesday was the JOLTS report, which was lower than expected, and then at the very end, we actually saw the non-farm payrolls. So yeah, significantly less than expected. So it pretty much basically skyrocketed gold. So I was looking at the actual announcement as soon as it went out. Gold must have gone up by 360 pips. So it was a quite significant sort of driver when it comes to the data, and it's really pointed a picture when it comes to a potential September interest rate cut. So it's going to be interesting to see how that eventuates. While the unemployment rate did tick up to 4.3%, so all that sort of US data, it was quite a big shock during the week.
Thank you, Steve. All right, and I'll jump in for the UK retail sales. So on Friday, we did see the print come out at 0.6%, above the 0.3% expected. And the UK markets seem to love it. The FTSE 100 initially did start to go up pretty high following that announcement before weakening, before reversing a lot of its gains up to that point in the day following off the back of a stronger pound. So the FTSE actually did close relatively unchanged. It was slightly down on the day, but again, that was a result of the pound. So the pound against the USD, it did gain 0.53% to overturn many of its early week losses. Also saw the pound gaining 0.58% against the loonie, although this was being accounted to a lot of the employment data coming out of those two nations. For reference, the euro against the pound was relatively unchanged on Friday. Moving into the Canadian unemployment, this one did actually come out a lot worse than expected. It was expected to be pretty bad, but not quite this bad. The unemployment rate, or headline unemployment rate, came out at 7.1% against the 7.0 expected, which is still 0.2% higher than previous. So not looking too great in Canada at the moment, and the loonie did weaken across the board when that did get announced, with the Canadian closing low against all major currencies on the Friday. And then next, just looking into the key and notable events from last week as well. Over the weekend, we had the OPEC Plus meeting where they did agree to increase oil supply production, although they did agree to hike the production at a slower rate than previous. So this time around, they're agreeing to raise output by 137,000 barrels compared to the 555,000 at the previous OPEC meeting. It did actually seem to boost the oil prices surprisingly. So I saw a quote from Investing Live's Eamon Sheridan, who is expecting bearish pressure on oil prices in the near term. He's forecasting some headwinds for oil producer countries such as the loonie and the Norwegian krone, while being supportive for imported currencies such as the euro and the yen. So to start the trading week as well, to start the trading week so far, oil actually has gone up pretty positively. I guess everyone was expecting a bit of a higher rate hike, so they were pricing that in with lower oil prices. That has since gone up. Next on the key and notable events, we've got the Japanese Prime Minister resigning. That one did have a bit of a knock on some of the Japanese markets to start the week, but we will look at that further in the technicals. As well, we had all-time highs on the S&P 500, gold, and silver. Silver, again, I will be covering a bit later into the technicals. So then to move into the week ahead, what we've got coming up, starting off the week, the big event, in my opinion at least, is the ECB main refinancing rate. So I've spoken a fair bit on previous videos about a number of the ECB policymakers. Right now, markets are largely expecting them to hold their rates, so are expecting a bit of a short-term period of euro strength from that as a result. So the argument to hold the rates has been emphasised by a number of ECB members throughout the previous week. We've got ECB's Simkus stating that there's no reason to adjust the rates right now, suggesting that there are rate cuts coming, just not yet. It's also shared by ECB's Muller and Schnabel, who are basically saying that there's no reason to cut the rates now. However, the ECB's Dolnek has taken a bit of a stronger stance on that, saying the ECB rate cuts are over for the year. He's citing stable inflation as well as a bit more of a certain trading or economic landscape off the back of the EU-US trade deal. Right now, Bloomberg are reporting that markets are pricing in a 30% chance of an ECB rate cut by the end of year, but there's no scope for that for the trading week so far. Okay, and then next into the week, we've got some inflation data coming from China.
Yeah, so the inflation data with China. So it'll be interesting to see, obviously, one of the biggest economies and how their inflation's going. Today, we actually saw the China, or yesterday slash today, we kind of saw the China imports and export data, which is basically a 6-month low. So bit concerning with the actual import exports, and it's really kind of shown a bit of volatility, especially in the Aussie. Within local markets, we are fairly flat when it comes to the economic news this week. So we've only got the Westpac consumer sentiment as well as the NAB business confidence that really just shows any sort of local sentiment. So I wouldn't expect that to probably impact the Aussie as much as, for example, the China inflation data. So we'll see with that. But the bigger sort of impact is going to really come again around the US. So this being the sort of week before the US Fed decision, so the September one, which is going to be announced on the 17th in the US time, but 18th in Australia. So 18th of September. We're going to really look at the unemployment claims. So obviously the unemployment claims previously hasn't been too great. But the real headline will be around the inflation. So because of the dual mandate, seeing that the employment numbers are low, we'll really get a gauge as to whether Jerome Powell's speech at the Jackson, Wyoming, he was basically saying that the employment data was going down and inflation was going higher. So it was basically going in the reverse directions as to what the Fed's trying to control. So this sort of data is really going to cement the September interest rate cut. At the moment, it's really priced into the market. So any sort of surprises to the upside, you'll probably see that that's going to have a very big impact. That it could be potentially a lower interest rate cut or otherwise even on hold. So it really depends on this sort of data. So it is very crucial. And then we'll see with the UK GDP. So again, just seeing whether there's a growth with the UK. We've also got the German inflation to round off when it comes to the other sort of mains of nations. There is also a Japanese bank holiday or the following Monday. Plus also another one that we're actually missing on that. It's also Ollie's birthday, which is actually a national holiday, I believe, for you. Is that right? A national holiday just for yourself.
It is a national holiday for me, and I will be enjoying it. Hopefully, the sunny weather stays around for the next weekend.
And that's your 21st birthday, I believe.
Oh, mate, don't do me like that. A few years off you at least, I can say. Okay, well, that seems like a great time to roll into the technical section. So I guess finishing off the week, you had the Japanese bank holiday. I think that's a good time. We'll move into the technicals, where I did briefly touch on it just before. I wanted to start off looking at the Nikkei for a couple of reasons. First one, I did actually want to point out, last time we did have a Japanese bank holiday on a Monday. We can see that jump just here as the start of August, just up till now. I do know there was a Japanese election in that, which does bring a bit of chaos into the markets. We could see that move higher, but if there's anything to go off for the last time we saw a Japanese bank holiday on the Monday, it's something to keep in the back of the mind if you are trading on the Nikkei. So to start off, we are looking at the Nikkei on the weekly chart. So it has been on a pretty impressive bullish run since early April, has been going up pretty strong. Can highlight by the green box here, we've got an upward channel for the prices here. So it has been pretty respectful of this channel dating back since, looks like about early May. I've seen a couple of times tried to break out above and it's traded back into the range. As well, we can see on here, we've got our three moving averages. That's the 50, 100, and the 200 day are all fanned out, evenly spaced, all pointing up into the same direction, which is a good signal for bullish momentum. This is also shared by the MACD and the RSI lines, which are above their respective signals, which historically will be an indicator of bullish momentum. So if we move this now into the daily, get a bit of an understanding of where we're sitting for the moment. So as you can see just here at the open on Monday morning, this morning, we did see a jump higher. So the reason for that is because over the weekend, we did see the Japanese Prime Minister resign. I think it was largely to the expectations of markets, but why I'm thinking the reason why it has jumped up is that it increases the chance for the Bank of Japan to hold their rates for longer. We have seen historical comments from the Bank of Japan as well as other central bank heads that they do tend to leave the rates untouched while the political uncertainty is still within the scope as well. As well, just wanted to touch on, we do have comments. So we do have one of the front runners for the Japanese Prime Minister spot at the moment. That is Sanae Takachi, who is historically, negative and favors monetary policy easing, which I also do think has added to the Nikkei's support on here. So for where I'm thinking for the charts now, I see it did jump high, pretty high towards the open and has since traded back down. And I'm expecting a little bit more of a pullback on this. So we can find support before continuing up. I'm thinking that we found here, it's had a considerable jump above, but I'm looking for the prices to pull back towards this previous resistance on Friday. Pull back, find a bit of a consolidation before carrying on to challenge towards its all-time highs. Now, if we move this into the 4-hourly, let's get a bit of an idea of where we're sitting for the moment. So, as I was saying, we are expecting, I'm looking for a bit of a pullback on the price, which looks like it has actually been going for the start of the day as well. See, the RSI did briefly drift into the overbought area, which historically will be met by somewhat of a pullback on the price, which is what we are seeing now. I still do think it has a little ways to go. However, I am a buyer in this market, so I'm looking to buy the dip. Looking for the prices to come down. It could be towards a psychologically significant price, potentially around the 43,500. If we see it find support here and continue up, I'm looking for an entry. Although if we do see a break lower, I do think it will continue, maybe towards today's opening price. But when we do find support, if I am seeing that, I'm seeing the RSI drifting within our range and the MACD continues to be bullish on here, I will be looking for an entry to go in, maybe to challenge on towards its all-time highs. Do just want to preference on there as well, though, that given that there is a bit of political unrest in Japan at the moment, a bit of uncertainty around whoever will be in the prime minister's seat, it is worth assessing your own risk management strategy if you are looking to trade on this, because political uncertainty can bring volatility into the market. So definitely worth thinking about that. So the next market I wanted to look at is silver. So I'll start out with silver looking on the daily chart. So similar story to what we've been seeing for gold over the course of the year. It is on a pretty impressive bullish run up. So I've highlighted on here the trading channel, which it has been pretty respectful of dating back since early June. So I've highlighted on here two key resistance prices just to give a bit of an understanding of where my head's at for looking for an entry into this trade. So you can see when the prices have gone up, been bullish, been met with resistance, they've traded back down into their moving averages and it continued to move up. When they do break above the previous resistance, it will do a particularly strong run up, find a resistance as well, come down to find support on its moving averages before continuing up. And I think that's what's going to happen on this occasion as well. So for right now, I am looking for the prices to pull back somewhat, I believe towards its moving averages or towards its previous resistance to find support before continuing up. I'm a buyer in this market. So again, I will be looking to buy the dips. So I do think this has a little bit of a ways to go further back before finding support and continuing on. I think this is also shared if we look into the 4-hourly chart as well. So we can see on our MACD and our RSI indicators that they are both angling down. So MACD line is below its signal line, which typically does indicate a bearish momentum on there as it heads towards its zero, as well as the RSI. It is sitting above its respective signal, which is indicating to me bearish momentum. So I believe that the prices will be looking to come down, potentially towards its support prices over the previous week there, make a move a bit lower, come towards its moving average. And if we do find support on the moving average and continue to go up, I will be looking for an entry to challenge towards its all-time highs. Okay, so that brings us to the end of the technical section now. So finishing off, we'll move into our Q&A section where Steve and I will answer some of your guys' most commonly asked questions from the week prior. Not entirely sure if we've still got Steve on
Yep.
here, so I will. Oh, you still here? Okay,
Yep.
cool. So, Steve, do you want to take it away with question one?
Yeah, so the first question is, what is stagflation? So basically, right now, obviously with a lot of the US data at the moment, seeing the sort of dual mandate that the US Fed that I mentioned earlier is really concerning about the unemployment rate as well as the inflation. So what we're seeing is there's a potential that the US could go into a recession, and generally recession is basically two negative quarters of GDP. Stagflation is actually the worst case scenario when it comes to a recession. It's still a type of recession. However, it's basically the unemployment being the unemployment rate being low, uh, being high, and then there's also the inflation being high, as well as not much actual growth when it comes to the economy. So it is the worst case scenario. It is something that you'd want to avoid. And the thing is that the recession itself, the word itself, it's got a negative connotation, but in the past, it's been required to actually control certain spending habits and really fuel up the economy again. But that's really question one.
Awesome. Thank you very much, Steve. And I'll take it away with question two. So, why do prices gap at the market open? Could have seen that on the chart I just showed for the Nikkei, but we did see a jump at the open. So, the question is why? And markets gap at the open because of events which occur over the weekend out of trading hours. So when the markets open on Monday, the opening price will reflect the impact of these prices, which can result in a jump or a drop in price. Most recent example being Japan. So over the weekend, we did see the Japanese PM resign. And as a result, this morning, we did see the USD JPY prices open up 0.45% on its Friday closing price, with the markets factoring in a weaker yen off the back of the increased uncertainty in Japanese markets. So, alongside the political uncertainty, other causes of weekend gaps can include economic data, geopolitical conflicts, corporate announcements, and among others. So, although these events can be sometimes hard to predict, if you are looking to hold positions over the weekend, I would say it is worth assessing your own risk management strategy so you can account for any unanticipated market moves at the open come Monday morning. All right, so that brings us to the end of the video today. A recording of this will be posted up on YouTube once we have concluded. As well, it will be posted in our VIP chat room alongside the Telegram group. If you have yet to check out either of those, I would highly recommend doing so. If you are looking for any information on how to get involved with any of the videos as well, please feel free to reach out to us in our VIP chat room. Steve and I are in there pretty much all day, every day, alongside a number of analysts from the Everest Fortune Group. If you're looking for any information for how to get access to those, please feel free to reach out to us directly. All right, I think that's all from me now. Thank you, everyone, for watching. Steve, I'll see you later.
Nice. Thank you, everyone, and happy birthday from Monday.
Cheers, mate.
See you, man. Bye.